Hi, I'm Meg Whitman, President and CEO of Hewlett-Packard. Thank you for coming to HP Next. Today, we announced our third quarter results, and once again, we achieved the financial performance we said we would, delivering 86 cents in non-GAAP diluted earnings per share within our previously provided outlook. Our disciplined focus on operations once again allowed us to deliver strong operating cash flow of $2.7 billion. As a result, we lowered operating company net debt to $1.2 billion, which is down over $10 billion from the peak in early 2012, and is approaching our goal of approximately zero. As we continue our fix and rebuild year, parts of the business are making progress, while others have not completely turned the corner. Overall, I remain comfortable with where we're headed. In printing, we once again delivered a solid quarter. Overall, we grew hardware unit sales for the first time since 2011. Although revenue is down, profitability is in line with our expectations, and the top line is stabilizing. In enterprise services, the business is stabilizing as we continue to execute well against our recovery plan. While revenue was down 8.7% over the prior year, it was better than the FY13 outlook range that we provided last October. Our year-to-date margin for this business is 2.4%, at the higher end of our FY13 outlook range. In software, we saw solid performance, with revenue up 1% over the prior year and 4.3% sequentially, driven by strength in security and Vertica, as well as sequential license revenue growth in autonomy. On the other hand, the enterprise group's overall performance was very disappointing. While we're pleased with our progress in converged storage, which did grow 37% over the prior year, our overall EG profitability was pressured by lower revenue, particularly in industry standard servers. The net impact of execution challenges, competitive pricing, and a misaligned go-to-market model is an expected loss of 5 points of market share on a revenue basis in industry standard servers. In our personal systems business, we're continuing to see PC market contraction as revenues declined for HP PCs 11% over the prior year. On a positive note, we did see relative strength and market share gains in growth markets like Asia Pacific and in commercial PCs. Our successful turnaround depends in part on having the right leadership in place. One of the leadership principles I follow is having the right person in the right job at the right time. And to that end, today we announced changes to our executive leadership team. Bill Vechte will become Executive Vice President and General Manager of the Enterprise Group, replacing Dave Donatelli, who will remain with HP and take on a special assignment. Bill is a proven technology executive with a wide range of experiences, leading sales, services, marketing, and engineering at scale. During his tenure at HP, Bill has run HP software, strategy, and over the last 15 months served as HP's Chief Operating Officer. As hardware becomes more standardized, leadership solutions are increasingly differentiated by the software layer that drives the hardware. Bill's experiences in software and in the enterprise, combined with HP's infrastructure leadership, will help HP accelerate innovation in converged infrastructure, cloud, and the emerging area of software-defined data centers. In a separate organizational move, Henry Gomez, Executive Vice President and Chief Communications Officer, will assume the additional responsibilities of Chief Marketing Officer. HP's current CMO, Marty Hamlisch, will become Chief Customer Experience Officer. Overall, I remain confident that we are making progress in our turnaround. We are already seeing significant improvements in our operations. We are successfully rebuilding our balance sheet. Our cost structure is more closely aligned with our revenue, and we have reignited innovation at HP. So thanks again for coming to HP Next.